What's going on, guys? Box here. There is a lot of different information out there when it comes to trading. And I remember when I started trading, I couldn't figure out where to start. And so I went down these rabbit holes of indicators and technical analysis videos and just everything YouTube would recommend me. And I just got spun in a circle. I learned a little about a lot of stuff, but didn't know anything truly about all of it, right? Little piece about trend lines here, little piece of Fibonacci's here, how to add an indicator, what an indicator does, but never knowing what it actually is. You always get the overview, but you never get the actual meat and potatoes. And that is why I wanted to make a series to help all the new traders get that information. So you don't have to go look somewhere else. You don't have to keep jumping from creator to creator. Because I promise you, this is on TradingView, my invite-only indicator list. I tried all the popular ones. I mean, I probably have 10 grand worth of indicators in there. And 99% of them are just garbage. They don't do anything for you except confuse you and just make things more difficult. So, before you can get to indicators, you need to know basic technical analysis. And that's what this series is going to be. It's going to teach you how to do technical analysis. So when you're ready for advanced algorithms such as Market Spy, which is my personal favorite. I mean, it's beautiful. Look at this. What's at the top? Red flag. What happens? We dump, right? But it's always easy in hindsight. But when price is got done ranging, goes to rip, what are you thinking? Oh, I'm buying the next pullback. Price is going to continue up. It's time to go, right? So you go long, and then what happens? You get annihilated. But once you buy all of those other BS indicators, you finally find Market Spy. You finally find the stuff that actually works, that actually has an edge and isn't just a free indicator locked behind a paywall with good branding. This is actual alpha here. This is actual edge that can make you profitable. For example, what do you notice at the bottom of this range? Pyramids. If you knew about Market Spy, you would know that you cast a buy box all the way down and ladder. What would have happened in this scenario, right? Down to this wick. What would have happened? You would have got picked up and you would have bought the bottom. But again, this is advanced algorithms. You can't get here until you know basic TA. And that's what I want this playlist that I'm going to make to be for all you new traders. So let's get the chart cleaned up. Let's make the candles a little more easy to see. And let's get into trend lines. So I'm using TradingView. It's the easiest charting platform that I've found. Very user-friendly, relatively inexpensive. They even have a free option where you can have up to 3 indicators, right? So you could have the Profiler, Armageddon, and MSX. You could have 3 at a time, totally free. So I really like TradingView. So that's what I'm going to be demonstrating on. So first, how do you get a trend line? Right? How do you get these tools? Well, with TradingView, they're already downloaded. They're already there. You don't even have to download or find anything. But how do you get to them? So once you open TradingView, this is the app for the desktop, but you can also just go to the website. It doesn't make any difference. I personally prefer the app because it runs quicker. But you come up to the top here, go to the second one down, and open it up because it might look like this. Right? And so you click that open and it's the very first one right here. And the reason why it has a star by it is once you start learning how to do technical analysis, you'll start realize certain tools you use most versus ones you rarely use. So ones I rarely use, but I still use, I do not star them, because when you star them, they're going to pop into this thing over here called your favorites panel. And yours might be sitting here, here, they can go anywhere. You can drag it wherever you personally want it. I like it on the top because it's always out of the way. But again, if you look at the end, if you look right here, if I come into my favorites page and I uncheck it, notice how it disappears and comes back. That's what that does. But that's where you find your trend line. So again, top corner of the page, second one down, first option. And now there's a couple schools of thought when it comes to trend lines, whether it is, do you go from candle close or do you go from the wick, right? There's many schools of thoughts, and some people are very rigid about this, but I think that's incorrect. And the reason why I think that's incorrect is because trading itself is very fluid. If you're rigid, it's just not going to happen. You're going to mess up because you're too rigid. You need to be able to adapt, right? So for example, when you see these huge wicks to the upside and there's tons of sellers here, you could have a short bias, right? And it goes down a little bit, cool, but then what happens? It rips up, right? You need to be able to change your bias, and you need to be fluid. And that is why I personally use both when it comes to trend lines. This isn't a big decision. Do not get confused over this. This is very, very simple, and I'm going to break it down to you why. So for example, we're going to ask ourselves, why did this pump happen, right? It came up here, came up here, came up here. Why did it choose to go higher right here? And this is where we're going to use trend lines to figure that out. So first, we need to identify where's a good point to pull from. Start our trend line, right? You want to start here, maybe? That's not too good, right? Because you only have one touch, a couple, then a break, right? Well, let's try candle close. It's not bad, but let's look around a little more. What if we go candle close from here? Not bad, right? But it could get a little better. Look if we go to the wick up here. Look at that. Now we get 1, 2, 3, a nice cluster there, and then finally break. So this is what I said about the rigidness, candle close only or wick only. There's no reason for that. This is how you do TA. The general is always the same, doing a trend line. The idea is always the same, but the practice of if you're going to use wicks or candle close, that can change. So for example, if we did candle close here, did candle close all the way, we see a somewhat of a wedge forming, right? But if we come down here and started at the wick, we come up here, this now makes the most sense. And the reason why is we get 1 touch, 2, 3, 4, 5, 6, 7, 8, 9. We get 9 touches here. That is a very strong trend line. For a fact, 9 times prices came into this and it has gotten support. So that's a strong trend line. The more touches, the better. And it has to be reasonable. You can't say, oh, look at that. It touched 1,000,000 times and it broke out. You were right. Sure, you can do it, but you're never going to gain an advantage doing that. You can only do that in hindsight and look like a genius in hindsight. In real life, you got to do what makes sense, right? And this is what makes sense. Price can't get past here, can't get past here, tries, fails, finally gets it, right? So this is the power of trend lines. It can help frame the market for you. So instead of just looking at price bouncing around, this now showed you using trend lines that price is squeezing. Look how long this move is, then this move, now these moves. It's very obvious to see price is compressing. It's getting squeezed down, right? Price got all the way up here, sellers stepped in. Price got almost that high, sellers stepped in. Price got this high again, sellers stepped in, again, sellers stepped in. But what you notice is lower high, lower high, lower high, lower high. That means the sellers that were up here are moving down and moving down. That means they're getting more aggressive. And that's how the trend line lets us see that, right? If the trend line is sloping downwards, that means price is going lower. And that means sellers, when they used to be up here, are now here and here and here and here. Make sense? And it's the same with buyers, right? Price got all the way down here before it got bought. Well, now it's right here. That means sellers are stepping up. And when they step up like this, that's when you can see the squeeze pattern happen. You can see sellers are stepping closer, buyers are stepping up. But the important thing about trend lines is do not jump the gun too early, because it's likely to happen that you will get wrecked. For example, there, here, here, all of these times you would have got wrecked, right? Price bounces, comes up. Oh, we broke the high. Let's go long. You go long, and then you get eaten alive, right? Then, oh, we broke the trend line. Time to go short. It reverses. You get eaten alive. Vice versa, over and over and over again. And the way we avoid that is we wait for confirmation. And you're going to say, Box, how do I tell what's confirmation? Why wouldn't I have went long here, right? It looked like it was going to break out. You know, what makes this breakout different than these? And the way they really tried here to get you. And the way you can keep yourself safe and give yourself an edge is by waiting for the retest. And so the retest is this. Right there. That is your retest, right? You have sellers stepping down. You have buyers stepping up. You have a fight going on. Who is going to win? Is there going to be more buyers or is there going to be more sellers? If there's more buyers, we're going to see expansion to the upside. If there's more sellers, we're going to see expansion to the downside. But how do we know when it's real? Because obviously, fake. How do we know it's real? Right? Say you bought the break here, right? Price shifted out of the zone, you bought the break, and then what happens? Price dumps back down into the zone. You get out of your position because you said, oh man, it was just another one of these. I was wrong, right? You close your position, then it runs without you. These are all mistakes that we make as new traders. Don't feel bad. It's gonna happen. But watching things like this is going to help that not happen. And so again, sometimes, yes, price will break. It'll just infinitely run and you'll miss it. But more times than not, you will get in with the best entry if you buy on the retest. And notice, price broke out, right? All the people that FOMO'd and said, oh my God, I missed the move. I got to get in. They got in up at this wick and had to sit underwater for 6 hours, 6.5 hours, right? You holding a trade underwater, 0.5%, say you're at 10x leverage, 100x for some of the crazy people out there, you're going to get annihilated, right? Especially when it dipped down almost 0.75%, you would have got annihilated, right? But buying the retest, you have your orders down here, whether it's a single limit order or if you have one of Market Spy's programs, Bybit Pro, you can cast your ladder down here to help you get a favorable entry and not have to sit through this 6 hours of BS. And again, this is all by trend lines. So now that we've understood how to draw them, right? You can choose wicks or candle close, just whatever gets the idea of what the market is doing in your head is what you should be doing, right? And it needs to make sense. Again, you know, if we go wick to wick, wick to wick, what does this do for us? What does this do for us? This is nothing, right? It does nothing, right? It doesn't do anything. You understand? You understand how you can obviously see when something makes sense? Let me get this in frame. How you can obviously see when something makes sense, right? Those other examples I just drew versus this example here that we had, that makes a lot more sense, doesn't it? And it's okay if you mess up and maybe you say, okay, well, I'm going to draw it from here and do it like this, right? Break out, retest. There it is, box. That's what you said. You broke out, you retested. Oh, but this happened again, right? It's because you can tell this doesn't, if you're going to anchor to this high, where's your low? What, maybe back here? You could do something like that for like a bigger triangle, but understand how things shift as you choose a different starting point. You can make a bigger triangle like this, but again, okay, you got 1, 2, 3, 4, 5. You got 5 touches, a big triangle. It works. It's fair, right? Or what makes more sense to you? That big triangle that kind of gives you a direction, but isn't, it's all right. Or does this make more sense? You have a nice range. You see it squeezing. We get the perfect, we get the shift out of the range, perfect back test, and then it runs. The longer you do TA, you'll start understanding, because you'll draw these, millions of times, millions of different ways, For example, this is on the 15-minute chart. So this trend line on the 15-minute, I need to use it on the 15-minute and below, or maybe like a time frame or two above. But if you try to take these trend lines on the daily, they don't even make sense. Notice that? They don't make sense, right? Because we're looking in on these lower time frames, we're looking inside these candles. So if I turn on, there's our wedge. You see that? Right? It doesn't make sense when you shift big time frames. So when you're on bigger time frames, you need to do your TA relative to those. And one way I highly recommend, for example, on the daily, we have a trend line, right? This makes sense. We're headed up. So you don't have to use my color scheme, but make one up for yourself starting today. Because since you're a new trader, make a color scheme for yourself that is monthly, weekly, daily, and then a small time frame. So for me, everything that is monthly and notice that on the daily, right? You see nothing, right? But for me, everything that is monthly is purple. Always. Solid purple line is monthly. So anytime on any of my charts, when I see a purple line, it's monthly. And then I go to weekly, go to my trend line here, and I don't need to draw this again because we already have it. But on the weekly, we see that we have a little bit of resistance on the weekly. So if we come up into here eventually, we need to know that that's a lot of resistance right there. And you can draw it again however you want. You could do something like that. But personally, what makes sense to me is take the range that we're currently in and do something like that. Maybe, something roughly in that area. And then we can go to, see what the oscillator is saying. Oh, that's beautiful. Bullish divergence on the weekly time frame. Our oscillator is going up while price is going down. This could be something big here in the next month. We could see a massive move if this holds. But again, this is about trend lines, right? And so we see that this is monthly because it's purple, right? It's my color scheme. So I don't change it ever. Choose what you like and stick with it. So once we get on the smaller time frames, you'll see relevance in this. So we have our trend lines from the monthly. And you say, well, I'm an intraday trader. I don't need monthly time frames. You will. And you'll see why here in a bit. So again, on the monthly, we have that trend line coming down, right? There's nothing to really anchor the bottom to. You could say, oh, there's one for the monthly. You could. But what does it do for you right now? It doesn't do anything and your charts get messy. No need for it. So again, we're on the monthly. That's pretty much all we got. So then we jump down to our weekly. My weekly color is always blue, just like my monthly color is always purple. And that's about what I see relevant here on the weekly. You might be able to do something like this. But no, I don't like it. So I'm now going to go down to the daily. So we had monthly, weekly, and now we're on the daily. And the daily is where we can now find that lower trend line, right? So we see we got something here, and my daily's always orange. Something roughly in this area here. I don't like that one there. I don't see the relevance when we have this here. All right, so yeah, that's what I like. So now we have our monthly, weekly, daily, and now we're coming to our intraday time frames. And notice that once we get to those intraday time frames, we see these trend lines, right? We see that these trend lines are actually doing something on these intraday time frames. So when we were back here coming crashing down into something, right? You would have seen you had a what color? Orange. So that's daily, right? You would see, oh, that's a daily level. It's not as strong as a weekly or monthly, but it's still a strong level, right? Then you get your bounce. Oh, look at this. We're coming into another daily level. Bounce, bounce, bounce. Then we go, right? So it's just another way. And again, now we're still on the 15-minute and we have another daily level. So once price, eventually falls down, or if it'll chop sideways long enough, maybe that's where we see the next shift out of the zone. Or when price goes and falls, if we break this, we know this is our next level we're going to be looking for. When we get a little more advanced and we start talking about horizontal support and resistance, you'll know where to draw these things. And so you'll get confluence of price coming down. Well, if price comes down into this, you have a daily trend line, a daily horizontal support or resistance, right? So that'll start building your confluence. But before we can get there, we have to start with the basics again, which is trend lines. And with our monthly, daily, or monthly, weekly, and daily, I always use those three colors and I keep them solid. And as you could see in our example earlier today, we have this trend line here which is dotted, right? Because these are my intraday. So when I look back on these, I understand the significance of the weight of the pattern. A 15-minute pattern holds 0 weight to a 4-hour pattern, right? And that's how you can differentiate on how you're going to do it. So I hope this helps. I hope you guys got a good idea about trend lines and how it works. Just to recap again, you can go from candle close or the wick. It does not matter. It's what makes sense, right? We could see that this made sense by the way price played out. As soon as we perfect back test and then expansion to the upside, right? Magically right to the wick, right? And then we fall double top, fall down. But this makes sense when you look at this. We are squeezing, perfect break, perfect back test. When price does things like that, when price does things like this and a perfect back test like that, that's how you can start getting confidence in your trend lines, because price is now reacting off them. You're seeing what price is doing, you're identifying it, and now you're playing off it. And when price, future price, right? Because you were able to draw this after this hump here. You had 1-2 touches, and then this really secured, like, oh, okay, this makes sense. Because a trend line is minimum 2 touches. You can't just have 1 touch. It's an anchor and then another anchor point, and then price should bounce on the next one. And so once you have here, 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 and here, you now have anchor points. You would have only had the resistance up top, but once you bottomed here and bounced, then you would have been able to draw these, and you would have been able to take advantage of this here, understanding that we're compressing. And again, when price starts respecting your trend lines, that's how you'll know you're doing it right. And TradingView offers this feature called bar replay, which is a pretty decent feature, and it lets you do this in real time. So you could just scroll back as far as you wanted, find wherever price is. So for example, it's up here. You could do bar replay and then just start drawing patterns and start identifying where is, where's a trend at. So for example, we're on the 15, so I need to switch this. For example, does this trend line make sense? Yeah, I mean, it's there, but does it do anything for you? No, it doesn't. You didn't get this trade. Price is so far away, it's not reacting. So now let's grab a new point. How about this here? Does this make sense? Kind of, not really. It's you didn't catch this trade, right? And so you just keep going. Again, 2 points, but nothing is connecting. So you just keep going until, and if something like that is happening, it's totally fine. There's no big deal to this. It is all personal preference. That's why there's all these different tools. But I hope you learned something. I hope to see you in the next video. Leave a like, comment, and subscribe. Let me know if you have any ideas, and I'll catch you in the next one.